Okay, so what we're going to do on this training video is we're going to do what is ATR. That stands for average true range. Now, what is ATR? It's a measure of the volatility within the candles. Now, obviously, at the moment, we're on SPY. We're on a 1 minute chart. That means that every candle is just 1 minute. And if we look at a candle, I'm going to zoom in on these candles here. Then we open here, we close here, and this here, effectively the up and down, and then the up and down here is your volatility. So if we scroll to the end of the charts, right, we're just going to reset the zoom. Then we need the indicator on. Now, on the screen share, we automatically put it in up here, right? And I'll just before I show you do that, I'll show you where we have it. It's all on the screens, right? And we just want to go to the screen share, and this is actually just on a different screen that we're not normally using, so we'll just get rid of that. So ATR there, ATR there, ATR there. You can see it, it's all highlighted in light blue, right? So basically that means the ATR of the Qs is 0.07 at the moment, right? So that's the current ATR. Now, just jumping to the training screen, we're going to actually put that study onto our screen. So if we look for average true range, which is there, then you have the length of the moving average. Now you can change the type, but we're just going to leave it as moving average simple moving average. And then this means take the average of the last 14 bars. Now, if we do that, we put that on screen, automatically draws a new chart below. And you can see there, that's the average true range. So obviously, as the candles get bigger, the average true range gets bigger. Now, why is this important? Why do we actually monitor this? Well, put simply, it's so that we can accurately judge what our stops should be. Because the average true range, if it's higher, like it is here, then we should have bigger stops, i.e. the stop loss, what we're looking to potentially lose, i.e. the maximum amount that we're about to lose could be potentially be higher here. Now, obviously, this means two things. If it gets really volatile, then we have either do a big stop, right, or we don't trade. Now, not trading is also a position, right? Because at the end of the day, what we don't want to do is lose big amounts of money if it's really volatile. So, do you understand what average stop loss is now? Average true range.
Roughly, yeah.
Yeah. Have you got any questions?
No.
Right. So, just to reiterate, right, if this is really high, then you're going to see big candles. Now, obviously, what I'm just going to do just to show you, right? So look how low this is between the lunchtime period. Always quietens down generally in the US lunchtime period.
Is the best trading time? What time is the best trading time?
Well, that's completely for a different video, but in a nutshell, for what we do, the first 2 hours is the best for the strategy when we're trading, say, the S&P. So obviously the S&P is literally what I class as a very rotational market. Obviously SPY is a derivative of the S&P, but basically the S&P futures is a lot more rotational than this. So obviously if we just switch to that, just to show you. So if we go to the CME and we come down to the S&P, choose the current contract, which is June, then what you will see is you'll see very, very similar layout to the SPY, because the SPY is a derivative of the S&P, right? And this is the futures for the S&P, right? But what you'll see is more rotation. Now, obviously, you can see because this stock's higher, your average true range is higher. So this is dependent on each stock. So now, if I change, which I will do on this, the length, right, to 2, as in an example, then what you'll see is the volatility of this graph go up and down because it's based just on the last 2 candles. So obviously, if you have a small candle, which you do there, if I just highlight that, you can see the volatility goes down. So realistically, you need this to be 10 bars plus to get a genuinely accurate reading. But if we go to the market open as an example, 9:35, you can see there the volatility jumps up.
Yeah.
Right. And then obviously it comes down. And then obviously as literally we get to the point where we're lunchtime, we get to the lowest point. So you can see there it's low.
Yeah.
So hopefully that's been very useful for the average true range. And I'm just going to stop recording this.